Hi guys, thanks for tuning in to another episode of Nuggets News. Well, can you believe it? It's been a year since our last 4-year supercycle video, and it's now only 111 days until the Bitcoin halving. So we're going to revisit what's going on. We're going to look at that Litecoin halving and the lessons we can learn from that, as well as Bitcoin Cash and Bitcoin SV that have their halvings slightly before Bitcoin's and how that may affect things. We're going to tie together all the fundamentals, the technicals, the sentiment, and that on-chain analysis to build that investing thesis that you guys know and love. So last time we looked at the charts a year ago, Litecoin was at $30 and then we ran to $150, so a 5x, and Bitcoin was trading under $3,400 and ran to $14,000, so around a 3 or 4x there. But staggering results if you were accumulating at that stage, and even better than a lot of us had expected for Bitcoin, and particularly the timing that came a little bit earlier than we were expecting. And I'm going to talk about how that's going to affect things going forward. So I want to start off by just mentioning that people get too overly focused on incidents, and they are not the things that actually cause price to go up. So remember, in the bear market, everyone thought the ETF was going to save us, and you can see that Google searches for Bitcoin ETF have dropped off to practically zero, and no one's really fussed about the ETF anymore. And I'm not that interested in these products that are backed by real Bitcoin. So I want real application. I want people using Bitcoin and needing Bitcoin in the real world. That is going to be the biggest driver. And obviously we saw backed as well. Now that's also dropped off to near zero Google searches, and they've switched to cash settled products for the majority of what they do now. So again, people got real hung up on this, and I don't want people to get too hung up on the halving, because that event itself isn't just going to magically make price go up. It's all these other things that I'm going to talk about today that you need to understand. So stock to flow is one of these terms that's been thrown around and getting people very excited, and that talks about the stock of an existing asset compared to the new flow that comes into circulation. And the relative scarcity is something that gives an asset value. So we see silver, gold's even more scarce again, and Bitcoin over time, as it's grown in value, is actually a little bit different to these assets. Because if you think about gold, if it goes to $5,000 an ounce, more gold miners come online, more people want to mine gold. Bitcoin actually is the opposite, where Bitcoin keeps going up in price, but it's becoming more and more scarce because of that halving that's programmed into the protocol. So that's why I think Bitcoin does have a chance at becoming a higher market cap than these other assets, because relatively it is more scarce, and we'll get into that a little bit more. Now, there's been some good counter arguments. We should also always read both sides of any argument, falsifying the stock to flow model. So check out that article if you want more details. But basically, it speaks about efficient market hypothesis. Now, Plan B came out and gave a rebuttal to the rebuttal. And what he's saying is that this market isn't perfectly efficient. Now, everyone, if everyone thought that Bitcoin was going to 100,000, why aren't more people buying now? And the market isn't perfectly efficient because people are too fearful of risk and volatility. And that fear maybe isn't warranted, because if you zoom out, Bitcoin's been a relatively smooth growth over time in terms of price and all the other metrics when you look at the network itself. So some really interesting arguments, and it's a matter of time now. We are going to find out who's right and if the stock to flow model holds true. This next halving is one of the most important, as the inflation rate of new Bitcoins drops from 4% to 2%. We know that central banks are targeting that 2 or 3% inflation band, and that's just what they're telling us. Now, the next halving drops to 1%, and that's when things get really exciting. But either way, central banks and governments are lying to us. Real inflation is far higher. If you measured it the way that inflation should be measured and used to be measured, it's 7 or 8%. And that doesn't even include actual M2 money supply and all the QE and repo market saving that Federal Reserve's now doing. The amount of money in circulation is growing far faster than what your wage is growing up. So relatively, you're always getting further and further behind. Now, with all this debt, $23 trillion in the US, $1 trillion a year deficits, $100 trillion in unfunded liabilities, they are promises that need to be paid. So all this money is going to come into existence in the future. So there's going to be $100 trillion US dollars. Now, what would you rather sit in? Bitcoin or gold, or something that's finite, the supply of it, versus something is going to have to be inflated, eroded away. You are going to lose your purchasing power and fall further behind. And now that's, let alone if the US dollar loses its world reserve currency and all of these other things we talk about. So very, very bullish for Bitcoin there. Now, with all this debt, obviously you don't want high interest rates, because no one can afford to pay 5% interest rates on 100 trillion of debt. You want them at zero, or you want them negative. So this is why Donald Trump is saying that other countries get paid to borrow money. I want negative interest rates. And if he's president, he gets re-elected. That battle between him and the Fed, and we're seeing it in other countries now as well. There's a lot of tension between, well, you should be doing it, government. You should be spending more on saving the economy. Well, no, central bank, you said that you're in charge. You should be doing more. And that friction is going to continue. Now, in 2019, we got negative yielding debt up to $17 trillion. And if you don't understand why an investor would buy a negative yielding bond, check out the video I did about negative yielding debt. But either way, when you've got negative yields, sitting in Bitcoin or gold becomes very attractive. Now, that really unwound to around $11 trillion, but that's either going to pick back up or real interest rates are going to do the damage either way. So there's no way where I think we get this healthy growth and everything gets better, this rosy situation. That just doesn't look like it's on the cards in terms of everything that's happening in the economy. So yes, I do think we are going to have more negative yielding debt. And as this unwound, Bitcoin and gold unwound, but as soon as it ticks up, I expect Bitcoin and gold to tick up again. So the Fed are doing this QE4 that they're not calling QE. The balance sheet is growing. They're having to bail out these repo markets. If we head into a recession, that is going to be even more money they have to print to fight off whatever comes their way. Central banks are now talking about doing even crazier things like printing money to buy up coal mines and fossil fuel power stations in Australia. So the central bank mandate of price stability, low employment, and prosperity of the people has all of a sudden changed to them now talking about buying stocks like we've seen in Japan, saving us from climate change, and bailing out hedge funds. They want to print money and give it to hedge funds as well as printing money to give to the banks now. So what on earth is happening? If more people understood this, there'd be a revolution overnight. Now, at the same time, they want more power, central banks. They want to issue these new payment platforms or central bank digital currencies, and we see all the banks getting together. So think about this choice that people have once they understand what's going on. You can either sit in this digital currency that's controlled by banks and governments where they can turn you off at the flick of a switch and you can't even buy food, and they're going to print as much of this as they need to pay down all their debts. Or you can have your own currency that's outside government control that can't be turned off, and there's a finite amount of it that can't be printed into oblivion. And that choice becomes very, very clear once people understand it. So China did go bullish on blockchain. We saw a big price run up at the time. Look, this is more focused on blockchain and their central bank digital currency than saying that Bitcoin's good. But Bitcoin's not illegal. That's the real take-home message here. And there's 1 billion people in China. There's 1 billion people in India. They just came out today and made it clear that crypto is not banned. And this is the countries that have the most opportunity. Now, we often get focused on these large countries, but think about all these currencies. I've shown this chart plenty of times now. There's hundreds of currencies around the world, and some of them have got market caps in the trillions or hundreds of billions. And when they all start needing to print more money to pay down all their debts, what's going to happen? People are going to make that choice I just spoke about, and money is going to flow out of all these big blue lines and push up this big orange line, increasing the market cap of Bitcoin. So very clear choice there. Now, as this starts to happen, there's more ways than ever for people to make that choice. So this is local Bitcoins. We see the volumes are increasing in general, but particularly in countries that need this, emerging markets, developing nations that are experiencing hyperinflations. So peer-to-peer trading on local Bitcoins is one option. We've now got these cash on-ramps where you can walk into news agencies anywhere in Australia. This is just a map of Melbourne. The number of places where people can get money into crypto now is incredible, and this sort of thing is going to spread worldwide. We've got these apps like Cash App in the US. That's now soaking up a big supply of all the new Bitcoins that come into existence just from one app. In Australia, we've got things like Bamboo that let you round up your purchases into crypto and stack sats, as they say. So think about the amount of money that's just passively flowing into Bitcoin, as well as all these new potential users, the monetary policy that's going to cause people to go into Bitcoin. There's hundreds of reasons why I see the market cap of Bitcoin possibly going up. Now, I want to focus on a few of the negatives before we talk about the price of Bitcoin around the halving. And that's because Plus Token, BitConnects of the world, BitClub, OneCoins, a lot of these have been busted now and come to an end, but they soaked up a lot of the supply. So Plus Token alone had 1% of all Bitcoins. And that's a double-edged sword, because not only is that money that people think they're investing into Bitcoin to push the price up, it's actually being dumped on markets and sold by scammers, so it's pushing price down. But it gives Bitcoin a really bad name. And in the media, we see all this stuff about scams, and there's so many scams out there. So if we can get rid of all these, it gives Bitcoin a more positive public facing, and it stops all that dumping that has pushed the price down. Particularly in 2019, we saw the Plus token dumping there. So hopefully that is coming to an end. The Craig Wright court battle, the judgment day is upon us. So a lot of people have this saga overhanging and they just want this to end. So we're going to get an answer to all that around the Tulip Trust very soon. And obviously Mt. Gox had to sell a lot of those coins during the bear market. And the judge has pushed back that date here to March 2020, the new submission there. So think about if all that is behind us, nothing too dramatic happens. That really does give us blue skies and the outlook where there's no fear about coins being dumped on the market, for example, and that can create that bullish sentiment and a bit of momentum. Now, the next thing I want to talk about is Litecoin. As I mentioned, last time we spoke, Litecoin was trading at around $30, and then we rocketed up to $150, and we're expecting the market to bottom a few months up to a year before that halving, and that played out really nicely. But what becomes important now is people saying, well, what happened to Litecoin? It ran up before, and then it sold off for a bit. And if it starts to take off again, people can say, well, I know Bitcoin's going to run up and then it might pull back a bit, but then it's just going to take off. So if the whales can sort of push Litecoin around, Litecoin does have talk of implementing all these privacy features and acting as a bit of a test net for Bitcoin and atomic swaps. So it can have those fundamentals, but it's more the traders that pushing price around that can create a narrative that gets people really excited and start to expecting the same thing is going to happen for Bitcoin. Now, that can also be true for Bitcoin Cash in the coming weeks. So its halving is a month ahead of Bitcoin's. I think Bitcoin Satoshi's vision, I haven't got the exact stats there, but similar, I guess, thesis that if whales jump into these coins, they push them around, they can create this narrative among retail traders, among the herd, as I like to call them, where they all just expect the same thing's going to happen and they pile in, and it can become a self-fulfilling prophecy. So just be aware of that, something that I will keep an eye on and obviously give more updates to our members as well. And tying that all in together is the Bitcoin dominance. So since Bitcoin was basically the only coin in existence, we've had all these other alts come in, and we've had alt seasons in the past and swings and roundabouts. But Bitcoin, the king, really asserted its dominance throughout crypto winter as people, went back to safety, and they did realize that most coins are, shit coins, for example. Now, since this has been trending higher, it just looks like it might be rolling over. And if we break down out of this channel, that could be that situation we speak about where maybe Litecoin and a few of these other altcoins that have actually got some good setups on the charts in the short to medium term, they actually outperform Bitcoin. Now, that would be a big opportunity if Bitcoin kind of falls out of favor in the months leading up to the halving. And then all of a sudden people go, oh yeah, the halving, and they get out of their alts, the whales rotate out of these alts they've been buying just when all the retail traders are FOMOing into alts at the top. They've increased their Bitcoin stack and Bitcoin takes off into that halving. So Bitcoin dominance, certainly something that I'll be watching and again doing more regular updates on for members. Now, in terms of the global volume monitor, I just want to show you this. It's available on FTX, but basically all these large exchanges that dominate the trading volume, they all have 100 times leverage. So price is volatile in the short term. These altcoins, traders can really push you around. And what matters for most people, it should be their HODL stack, their long-term coins. Don't worry too much about short-term price fluctuations. Now, if you are going to look at the shorter-term things as well as the longer-term things, I'd recommend using all the data that's available to us. So these days, we've got things like open interest, long-short ratio. How often have we seen that everyone gets long and then price goes down, they get liquidated? Or everyone thought that Bitcoin was going to go below 6K, so the shorts pile in and it turns around and they all get liquidated and we get a big move to the other side. So once again, being a contrarian, not being one of the herd, can really pay off. Other sites I suggest you look at is Sentiment. Look, I've got a premium subscription here, but things like market value to realized value, more people are putting real money into Bitcoin and seeing the value of holding it longer term. We've got these data metrics like the long-term sentiment score, NVT tweet ratio, when we look at the actual volumes that are being traded and the amount of people that are tweeting about things and getting excited. A lot of these metrics are now turning higher. Unrealized profits and losses. So when a lot of people are in a loss, that can be a good time to buy. When a lot of people are in a profit, that can be a good time to sell. And we're back to a happy medium now. I think we're resetting, ready for the next move higher. A couple of these other metrics I like to look at, coins with certain balances over 0.1 or even over 1, that's all trending higher. We see people accumulating Bitcoin, days destroyed, dormancy. So all these metrics are telling us that there's a record amount of people that are holding coins and they're not being shaken out. That's all very, very bullish. So when we look at the Wall Street cheat sheet, a lot of coins have been through this cycle now where we had the 2017 bull market, we've unwound, we had the anger and the capitulation, the depression, and I think a lot of people were thinking that this is just another lower high, this is a bit of disbelief, we're going to go down to $1,000, and there is a bit of a thought that this is a sucker's rally in the general public in particular. So they're not interested in Bitcoin. Oh, it's just another, it's just another bit of a pump and there's a dump coming. They don't even think that Bitcoin is a real asset, and that just leaves the way for a lot of people to join the space and yet to invest. Final couple of things I want to mention for short-term and long-term indicators I like to look at. We can look at the RSI, momentum indicators, funding rates, for example. It gets very expensive to long when everyone's getting long. It gets very expensive to short when everyone is trying to short. These are the things we can help us make decisions. Look, the MACD is about to cross positive on the weekly on Bitcoin. It's just crossed on Ethereum and a few other coins, I think. So a lot of these momentum indicators are telling us that things are turning positive. The other one I like are the Bollinger Bands. So when we get overbought on a weekly, that can be a good signal that it's time to sell. When we get oversold on the outside those Bollinger Bands and oversold on the RSI, tie all these indicators together, build a picture, and it's all looking really positive long term. So if you can't keep up with all those indicators, I do daily updates. We give out emails, plenty of extra insights in our crypto community, and you can join up there at nuggetsnews.com.au. We're about to launch a new portal. We've got plenty of free resources over there to teach you about all these things, because I do like to tie together those fundamentals, the technicals, the on-chain data, and the sentiment analysis. So let's get to the important stuff now, the big picture outlook for Bitcoin. Now, the first cycle we see here is Bitcoin's Genesis block, and we mark the the halvings by these black lines here. And the green cycles are something that I've put on the charts, and I believe they mark the times when Bitcoin should be going up and then down. Now, in an ideal world, we want Bitcoin to go up for the majority of the length of this cycle and then have a bit of a pullback. This cycle here, we went up for a bit over half of the cycle, and then we had a pullback. Up for over half of the cycle, and then a bit of a pullback. Now, what was different this time, if we get out our copy chart pattern tool, we can say that Bitcoin actually had a bit of a run up earlier than in previous cycles. So if we have that overlaid there, we can see that this period here when Bitcoin really pumped was traditionally a period, and something that I was expecting at the time, where I thought we'd get more of a chance to accumulate in sideways action. So was this pump unnatural? Was it caused by the liquidation of a lot of people that were trying to short at that 6K that we thought was going to be resistance at the time? But either way, now we are getting into the period where we'd expect price to start to trend higher. And ideally, we want this to trend higher for at least half the length of this green cycle. We want to be making new highs. Depending on the steepness of this trend, we can go to 30,000, but we might get a bit of a pullback then, or we can go for the length of this bracket for a couple of years, ideally getting towards that $75,000, $100,000 mark that we'd all really love. Now from there, we would expect a bit of a correction down into 2023, and that would mark the point when we start to look for those people that are front running the next halving in May 2024. So lots of possibilities there. A more bearish scenario would be that we've maybe already topped and that this is a longer term down cycle, but at the moment I don't see that as likely because of all the metrics that I just spoke about. But we like to keep our mind open to all possibilities there. We know Bitcoin can do anything. But tying it all together, I do expect that Bitcoin's going to grow to compete with the market caps of these large cap tech stocks around $1 trillion. It's going to capture market share off these hundreds of currencies with market caps in the trillions or hundreds of billions of dollars. That gives Bitcoin a lot of room to grow to a far higher market cap. And we're going to see if this stock to flow model holds true with only a few months to go now. So guys, if you've enjoyed all that, head over to nuggetsnews.com.au for more info on anything we do. Otherwise, smash the like button, subscribe if you haven't already, share this video around, and thanks for tuning in. Cheers.